Hello everyone, welcome to the introductory course on Shanghai crude oil futures and its latest performance. Shanghai crude oil future was launched on March 26, 2018. Today I will give you an overview of Shanghai crude oil futures. This introduction will be divided into three parts, including crude oil market overview, contract design framework, and our short-term plan. First up, I will talk about the market overview and updates on Shanghai crude oil futures. When we look at the global oil consumption in 2019, you can find out the Asia-Pacific region consumed the most, accounting for nearly 37% of the world total consumption. However, Asia-Pacific has comparatively weak price influence. Usually, the main global crude benchmarks are WTI and Brent futures, which represent the price in North America and Europe respectively. Generally, over 60% of the global crude trades are using Brent as benchmark price, while in Asia-Pacific region, the average price of Dubai and Oman crude has been used as a reference, and no such benchmark futures price in the region can fully reflect the oil supply and demand situation in Asia-Pacific. That's why INE launched the Shanghai crude oil futures in 2018. Currently, our Shanghai crude oil future is a crucial supplement to global crude oil benchmark. This is a comparison chart of the most traded crude contracts globally. WTI and Brent contracts are the benchmark for light sweet crude. Oman crude and Shanghai crude are medium sour grade. But the difference is that Oman crude is FOB price and it's settled in US dollar, whereas Shanghai crude is CIF price and it's settled in RMB. Let's take a look at this table. According to FIA 2019 annual volume ranking of energy futures and options contract, Shanghai crude oil future was ranked the 14th. Or so among all of these crude oil futures, when we convert the unit from lots to barrel, you can see Shanghai crude oil future is the third most traded oil benchmark in the world. This is part of the timeline of our past achievements. INE has launched the Shanghai crude oil futures on March 26, 2018, and in the first half of this year, the average daily trading volume of Shanghai crude oil futures was 170,000 lots, and the average daily open interest was 116,000 lots. Compared with the same period last year, the amounts went up 3% and 286% respectively. As of the end of August, more than 190,000 investors have opened a trading account at INE, and these investors come from 22 countries and regions across 5 continents, including Asia, Africa, Europe, North America, and Oceania. Foreign investors are mainly institutions like oil companies, trading houses, and financial institutions. In the first half of 2020, retail investors accounted for 60% of the total trading volume, but for open interest, retail investors only account for 40%. In addition to this, our overseas investors accounted for nearly 1/5 of the total trading volume and 1/4 of the open interest. And from the chart, we can see the proportion of institutional investors and overseas investors are gradually increasing. Shanghai crude oil futures is highly correlated with price of Brent and Oman. Since its launch in 2018, the price correlation coefficient with Brent and Oman is around 0.98. While it's worth noting that our price always reflects market condition in China, as well as Asia Pacific. And sometimes, especially during Asian daytime trading hours, our price reflects market trend ahead of any other global benchmarks. For instance, in the first half of 2020, the price of Shanghai crude is less volatile than WTI and Brent, which does reflect the fact that China has better comparative stable oil demand than the rest of the world. In addition to this, when the Iranian oil tanker was attacked in October last year during Asian daytime, the price of Shanghai crude reacted immediately, ahead of any other global benchmarks. We can take a look at this map. The dark blue area are the locations of our designated crude oil terminals. Starting from the beginning of this year, we have added several new terminals and make the total number of oil terminals from 9 to 14. They are located in Shandong, Hebei, Shanghai, Zhejiang, Guangdong, Liaoning, and Hainan. As of the first half of this year, the total storage capacity has tripled to over 10 million square meters compared with the original storage capacity. Since the launch of Shanghai Crude Oil Futures in 2018, we have completed 25 deliveries, and a cumulative delivery volume has reached 85 million barrels, and among these, around 64 million barrels has been delivered in this year. With the increase of delivery volume, our delivered crude oil has been shipped to various destinations and has started to spread out in Northeast Asia. Therefore, the meaning of our price cannot be simply considered as CIF price. Instead, this has begun to somehow represent the price for the distribution center. As you can see from this picture, some of our crude has been shipped to South Korea and Myanmar. Next, in the second part, I will elaborate on the design of Shanghai Crude Oil Futures. The overall design framework of the Shanghai Crude Oil Futures can be summarized as globalized platform, RMB denomination, net pricing, and bonded delivery. This product is China's first commodity futures open to the global investor. Our crude contract is denominated in RMB, and overseas investor can use US dollar as margin collateral. Our contract is net pricing contract. It means our price is quoted without tariff and value-added tax. This is designed to avoid the influence of changing tax rate on pricing, and this makes Shanghai crude contract easier to compare with other global benchmarks like WTI and Brent. In terms of the delivery mode, this contract is bonded physical delivery. Both domestic and overseas investors can deliver crude oil into our designated bonded terminals. INE will issue electronic bonded storage warrants to the investor who deliver the crude oil into these terminals. The warrant is a certificate for the amount of crude oil you have stored. Therefore, the delivery process can be also considered as the title transfer of the standard warrant. This means if you are a seller and intend to deliver, you need to obtain the e-warrant before the last trading day. This is our contract spec. Our underlying product is medium sour crude oil, and our product code is SC, which stands for Shanghai Crude or Sour Crude. For the rest of the contract spec, I will go through it in a later slide. A lot of people will ask why INE choose medium sour crude as the underlying quality. This is because medium sour crude accounts for more than 40% of the global oil production. In addition to this, for China and its neighboring countries, such as Japan and South Korea, medium sour crude is the most widely used feedstock for the refineries, and it is the crude stream that China imports the most. Based on China's import situation and a contract benchmark quality of API gravity of 32 degrees and a sulfur content of 1.5%, we selected 6 Middle Eastern crude oil and 1 Chinese crude oil as our deliverable grades. They are Dubai, Upper Zakum, Oman, Qatar Marine, Masila, Basralai, and China's Shenli crude oil. All of these deliverable crudes need to be shipped directly from the place of origin. Also, we are continuously conducting research on improving deliverable grades, so please follow the circular section of INE's website. Since INE is a globalized platform, there are 4 access modes for the overseas investor. On this diagram, the first access mode is that overseas investor can trade through our domestic futures firm if they are familiar with China's futures market. But if not, they can choose the second and third mode, that is, trade through an overseas intermediary, and then the overseas intermediary will execute an order through a carrying broker. which could be either a local futures firm or an overseas special brokerage participants, which you can consider them as overseas FCM. The fourth access mode is that an overseas investor can choose to become an overseas special non-brokerage participant to trade directly on INE. The oil majors, trading house, and proprietary trading department of investment banks might fall into this category. And here, just a heads up, overseas special participants, including overseas special brokerage and non-brokerage participants, can send orders directly to INE matching system, but the trades should be cleared and settled by a domestic futures firm. So that means overseas special participants are similar to trading members. This slide is an overview of the contract size of global crude futures. Like many other contracts, the unit of Shanghai crude oil futures is 1,000 barrels per lot. Assuming 5% as the margin rate, the contract is traded at $50 per barrel, and RMB exchange rate against the US dollar is 7. The contract value would be 350,000 RMB, and the initial margin per contract would be 17,500 RMB. Please be aware that for investors holding both long and short position in the same contract, INE will collect the margin solely from the side for which a larger amount of trading margin is required, except for the contract held after the closing of the 5th trading day prior to the last trading day. With regard to the tick size, ours is 0.1 RMB per barrel, which is almost equal to 1 cent US dollar per barrel of the mainstream crude oil futures contract. Our price limit is 4% above or below the previous day's settlement price. INE adjusts the price limits based on the market conditions, and a recent adjustment will be posted on our official website under the circular section. Currently, there are 20 contracts listed on our trading platform. The first 12 contracts are consecutive monthly contracts, and then followed by 8 quarterly contracts. These listed contracts cover a time span of 3 years. The trading hours for INE crude oil future is from Monday to Friday, 9 a.m. to 11:30 a.m. for the morning session, 1:30 p.m. to 3 p.m. for the afternoon session, and from 9 p.m. to 2:30 a.m. for the night trading session. INE will continue to observe the needs for extending the trading hours, and we might extend it later according to the market conditions. With regard to our last trading day, it is the last business day of the month preceding the delivered month. INE is entitled to adjust the last trading day in accordance with China's national holidays. And usually INE will set the last trading day ahead of the national holidays. In addition to this, the setting of the last trading day depends on the delivery mode, and I will elaborate on it in the next slide. Here is an example of the comparison of the last trading day for different crude futures. The Brent crude future is a cash settled contract. The last trading day for Brent contract is the last business day of the second month preceding the contract month. Therefore, for the September contract, the last trading day is July 31st. For DME Oman crude futures, it is physical delivery through shipping, so they need to leave enough time to prepare. So for the September contract, the last trading day is also July 31st. In terms of the WTI, it is physical delivery through pipeline. Therefore, it's much easier to do so. Their last trading day is August 22nd. While for INE Shanghai crude oil futures, our delivery mode is physical delivery through the title transfer of the electronic standard storage warrant. So for the September contract, the last trading day is August 31st, which is the last business day of the month preceding the delivery month. These are our exchange rules, which you can find on our website under the Rules and Regulations section. To open an INE account and trade Shanghai crude, investors need to meet our trader eligibility criteria, which involve several aspects, including fund requirements, trading experience, basic futures knowledge, and etc. To participate in crude oil futures trading, an institutional client should have an available balance of no less than 1 million RMB or its equivalents in foreign currency in its bank account for 5 consecutive trading days before applying for trading code or for trading access, while for individual clients, the fund requirement is no less than 500,000 RMB. In terms of the foreign exchange policy for Shanghai crude oil futures, we can take a look at this diagram. If an overseas investor chooses to directly trade through a domestic futures firm, they need to open a non-resident account at INE designated depository bank. And under this NRA account, there is no cap limit on funds transfer between onshore and offshore. However, the position limit rule is applied. In addition to this, Shanghai crude oil futures is denominated and cleared in RMB. Overseas investor may use US dollar to serve as margin collateral. A 5% haircut is implemented for US dollar collateral margin to cover the daily foreign exchange fluctuation. Currently, RMB is the only acceptable denominated currency in making up the daily loss from trade, whereas for profit, overseas participants can choose to take either US dollar or RMB in advance. Change of designated currency can be made every 6 months. The exchange of foreign currency will only happen when there is a profit or loss resulted from trading. An overseas investor cannot initiate currency exchange at will. With regard to the trading margin, the margin requirement level is gradually increased when the delivery month is approaching. The 3 margin rate levels are 5%, 10%, 20%, respectively. By using Shanghai Crude August contract as an example, the margin rate was 5% since the listing date, but on July 1st, which is the first trading day of the first month prior to the delivery month, the margin rate will be increased to 10%. And then on July 29th, the rate will be increased to 20%. In terms of the position limit, which is designed in both pro rata basis and a regular position limit. A pro rata basis is only when our open interest surpasses 75,000 lots. Then INE will require the position of futures firm member, overseas special brokerage participants, and overseas intermediary not to exceed 25% of the total market open interest. Besides the pro rata basis limit, a regular position limit is applied to non-futures firm member, overseas special non-brokerage participants, and clients. Under this position limit, from the listing day to the last trading day of the 3rd month prior to the delivery month, the position limit is 3,000 lots. And then when the time moves to the 2nd month prior to the delivery month, the position limit will shrink to 1,500 lots. Then in the last month, the limit will be only 500 lots. Currently, in order to meet our investors' needs and improve the market efficiency, INE has offered a task order in a trading system. We can take a look at this table. The task order is only available for the 1st and 2nd line of the contract. The settlement price is based on current day settlement price, which is the volume-weighted average price of the entire trading day. In terms of the trading hours, it is from our continuous trading hours to the end of the first trading session. That means it's from our night trading session central auction to 10:15 Beijing time. The last trading day is the 8th trading day preceding the last trading day of the contract. Last part is about our future plan. We will keep improving our contract design to align with global practice. INE will try to bring more participants on board and accelerate our research and development on other energy contracts, including gasoline, diesel, jet kerosene, and natural gas futures. Meanwhile, we will promote derivatives and financial products based on our crude oil futures. That's all for today. Thank you very much.